Welcome to Property Box News, I'm Neria Kearns. This week, takeaways and renters' needs. But first, there has been an improvement in the letting market according to board company Agency Express. The latest letting data from the Agency Express Property Activity Index revealed that the number of new rental property listings to let increased by 12.6% in February compared to the previous month, while the volume of properties let was up 8.3% during the same period. Looking at performance across the UK, 10 of the 12 regions recorded by the Property Activity Index reported increases in new listings to let and let by. The largest increase in the month's index was recorded in Scotland, with properties to let at 37.2%, while the region also reported the largest increase in properties let at 34.7%. The West Midlands followed suit with figures for new listings to let at 20.1%. Stephen Watson, Managing Director of Agency Express, commented, "This property activity index has remained by and large true to trend. A few regional pockets have reported record bests, but on a whole, demand continues to be greater than supply." Additionally, the number of landlords re-entering the market has increased. Estate agent Hart has reported landlord registrations are up 8% on the month across England and Wales, led by a 12% gain in London. Paul Smith, CEO of Hart, said 3 years on from George Osborne introducing the 3% hike in stamp duty surcharges on second homes, landlords are beginning to come to terms with the additional costs and are cautiously entering the market again. Interestingly, sale prices to landlords are down by nearly 12% on the year, which may be spurring on this activity. These price decreases could be causing the available stock to fall with lower stamp duty thresholds, making the stamp duty levy a little easier to stomach. Despite this, landlords are not back in their hundreds. The number of registrations is still down 22% on the year. What we can take from this is that investors are recognising the value that can still be found in buy-to-let property, especially in comparison to the overvalued and faltering stock market. Investors are increasingly returning to property where they deem their money safest and where the yields are highest. And it seems that when it comes to local services, renters are increasingly checking how good the local takeaway delivery service is in a new area. Traditionally, it was all about transport links and good schools, but for the millennials, that's the 16 to 29 age group, good food delivery options are a high priority when choosing a new home. A recent survey shows that almost 75% of 16 to 29-year-olds surveyed regretted not looking at the food delivery options when viewing a property, with more than half, that's 55%, of people saying they would make sure they do next time. With the rise of Deliveroo and Uber Eats offering delivery from restaurants that don't have delivery, it's no surprise that last year, on average, people in the UK spent £46 a month on takeaway. Joe Groves at Deliveroo had this to say, "A good takeaway goes hand in hand with move-in day. We know our customers depend on Deliveroo for that first meal using packaging boxes as tables. We weren't shocked to hear that food delivery is becoming increasingly important for British house hunters." Food for thought there. One last thing before I go, the Bank of England governor kept the interest rate at 0.75% last week. Predictions are there will be no further rises for another couple of years. That's all from me. Remember to like, share and subscribe. Goodbye.